Welcome to Earnings Central. In this video, we'll break down Rubrik's fourth quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q4 was $233.1 million. The company actually reported revenue of $258.1 million, surpassing expectations by 10.7%. This quarterly revenue also marked a huge 47.5% increase compared to the $175.0 million reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q4 was a loss of 39 cents. The company actually reported a loss of 18 cents per share, exceeding expectations nicely by 21 cents per share. This result also reflects a significant $1.34 per share improvement compared to the loss of $1.52 per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. The company reported that their subscription annual recurring revenue, ARR, reached $1.093 billion. This is a significant milestone for the company, showing they've achieved considerable scale in the competitive cybersecurity market. This subscription ARR represents an impressive 39% year-over-year growth. And if you look at their cloud ARR specifically, that grew even faster at 67%, reaching $876 million. This demonstrates that Rubrik's cloud-focused strategy is resonating strongly with customers as organizations continue their cloud transformation journeys. One metric that really stands out is their subscription net retention rate, which remained above 120%. This means existing customers are not only staying with Rubrik, but significantly expanding their usage of Rubrik solutions. About one-third of this expansion comes from customers adopting additional security functionality, up from 29% in the previous year. On the cash flow front, Rubrik generated $75 million in free cash flow in Q4 alone, compared to just $9 million in the same quarter last year. For the full year, they reported $22 million in free cash flow, compared to negative $25 million in fiscal 2024. This represents a dramatic improvement in their cash generation capabilities. The company also highlighted a substantial improvement in their subscription ARR contribution margin, which improved by over 1,400 basis points year-over-year. This metric turned positive at 2% compared to negative 12% in the previous year, demonstrating Rubrik's progress towards sustainable profitability. Finally, Rubrik reported they now have 2,246 customers with subscription ARR of $100,000 or more, which is up 29% year-over-year. These larger customers now contribute 84% of their subscription ARR, up from 80% in the prior year, showing Rubrik is becoming increasingly strategic to enterprise customers. Now, let's shift focus to some of the key insights and takeaways from the earnings call. First, cyber resilience continues to be the driving force behind Rubrik's market leadership. CEO Bipul Sinha emphasized that as companies undergo multiple technology transformations to prepare for the AI era, they quickly realize the need for a modern data security strategy. Rubrik's focus on cyber resilience positions them to capitalize on this need. The company repeatedly highlighted its strong position at the nexus of data security and AI. According to Sinha, we are the only cybersecurity company that sits at the intersection of data security and AI. This unique positioning is helping them win market share as customers look to secure their data for AI initiatives. An important product development is the full integration of Data Security Posture Management, DSPM, into Rubrik Security Cloud. This integration allows customers to rapidly enable DSPM to increase data visibility and sensitive data control directly from their existing Rubrik Security Cloud instance. This capability is particularly valuable for companies implementing generative AI, as it helps them understand data sensitivity and ensure only appropriate data is used. Rubrik is also seeing significant traction with their Active Directory innovations. They recently made their orchestrated Active Directory forest recovery generally available. This solution transforms what was once a manual recovery process that could take weeks into an automated recovery that can be completed within an hour. Several customer wins were highlighted specifically around this capability. The company continues to expand in cloud and SaaS protection areas. Multiple customer examples were shared where organizations selected Rubrik to protect Microsoft 365, AWS, and Azure environments. One Fortune 50 organization selected Rubrik Security Cloud to protect Microsoft 365, one of its most critical SaaS applications with tens of thousands of users, demonstrating 98% faster recovery than native recovery tools. Finally, Rubrik's strategic partnership with Microsoft appears to be a significant growth driver. Bipul Sinha described Microsoft as one of our strongest partners, noting complementary offerings between the companies. Microsoft recognized Rubrik as Partner of the Year in the US and UK in 2023 and as Healthcare Partner of the Year in 2024. Looking ahead, Rubrik guided to fiscal 2026 subscription ARR in the range of $1.35 billion to $1.36 billion, reflecting approximately 24% year-over-year growth. They expect revenue growth of around 30%, with continued improvement in subscription ARR contribution margins. While some analysts question why net new ARR would be lower in fiscal 2026 compared to 2025, management emphasized they're being thoughtful with their first annual guidance as a public company and want to set numbers they feel confident about. In closing, Rubrik appears well-positioned at the intersection of several important technology trends: cybersecurity, data protection, cloud transformation, and the growing need for AI-ready data infrastructure. As CEO Bipul Sinha concluded, it's early days for the company. Our ambitions are very, very large. The best is yet to come. That wraps up our recap of Rubrik's fourth quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.